What's going on, YouTube? It's Dave's Daily Trades, back again with an update with AMC. So, a lot to talk about today. But to start off, we were down 1.32% in normal trading hours, but we had a massive double bottom at that $20.80 mark. Some really great things. We're also going to be discussing the latest developments with Adam Aron's release of some cryptocurrencies. We're going to be going over options flow. We're also going to be going over some various interesting articles going on and floating around the internet in regards to hedge funds. What doing hedgies? Not good, I'll tell you that. But guys, without further ado, let's roll right into that intro and hop into the technical analysis. And we're back. All right, folks, let's show all the drawings and hop into the technical analysis. So first, I do want to start on the 5-minute chart and really just go over some things that I've been looking at for the past couple of days. So, of course, as you all know, we have been trading in this bear flag, which was first established on 12/30, and we have been really respecting this trend for the past just about week and a half now. And we haven't been able to break out. Briefly this morning, when we did have that drop to the double bottom at $20.80, we did find ourselves outside of this bull flag, but right away we were actually ripped right back into the middle of this and then traded sideways for a majority of the day, slightly closing under. But we were down at one point quite a bit, so being down 1.32% is not too shabby in my opinion. Now, what is really the big thing? Well, we did close under our support here at $22.53, which I would have liked to see us close above this, but it really is okay. Now, going into tomorrow, guys, I do believe, we are going to continue trading inside of this bull flag here, potentially another retest of this bottom here before making a breakout. But of course, guys, the bull flag is called a bull flag for a reason. It is bullish. Once we do break out of this, regardless of when it is or how it is, it will be a great push to the upside. Now, jumping over to the 1-hour chart, what we have been discussing is this Wyckoff accumulation schematic playing out here. And as you can see here, things look pretty decent for the most part. Specifically, I love to see a perfect, literally to the cent, perfect double bottom at that $20.80 mark. And just to show you all what I'm looking at here, I'll link this in the description below so you can take a look at this, read through it, go over the entire schematic, why it's useful, why we're actually covering this, and all of those goods that come along with this article. Now, nonetheless here, what you have is your ST in phase B, which I do believe was that $20.80 mark, that terminal shakeout on the larger scale schematic. And where I have us now on that micro scale schematic is in this phase C here, where you have this spring, a retest, and you kind of just bounce your way out of this phase C into your phase D, where the volume really comes in. Now, jumping back to our charts here, we can see that's playing out pretty nicely. So you do have your sell test in phase B at $20.80. And you do have this bull flag pushing you down into that phase C, which really makes a lot of sense. As you can see, this is not 100% accurate, guys, but pretty close to what's going on. In phase B, moving into phase C, you do have that bull flag that pushes you down. Now, once you break out, you retest that bull flag before moving into your phase D. Now, one thing I do want to note is nothing is going to be 100% to the T with this accumulation schematic, because things in trading are not that simple. Now, you don't necessarily need to have two of these tests on this lower and upper trading range here. You do not necessarily need to have your LPS, and you certainly do not necessarily need to have as much consolidation in your SOS. Some things can blow past if we've met certain supply and demand metrics, or other things could take longer to play out depending on those supply and demand metrics of the composite operator or composite man controlling this stock. So with that said, guys, I do believe that regardless, we are going to break out of this. Now, we could potentially see some downside to maybe $19, or potentially coming back to retest that gap fill at $17. That could act if we do hit that $17 mark, or even $16.50, $16.70 area. That would act as a terminal shakeout on this micro scale picture here. Really, terminal shakeouts are very, very bullish, because that's really your last push down before you have the influx of volume that comes back in and really just drives that price sky high. Now, I am personally not on the picture of we are going down here to $17 to close this gap fill. Not all gaps necessarily need to be filled. Now, I do believe we may come down tomorrow and retest maybe again of this 2080 area, potentially even going down briefly into the high 19s before finally coming out either Monday or sometime next week and breaking out of this flag. Now, if we do decide tomorrow to bring that freaking volume, then we can break out of this and start our push to the upside. Our push to the upside, I would like to see, is first a breakout, then a retest of this trend line here, before really confirming our breakout and moving to the upside. Now, support and resistance lines to the upside that I'm looking at, first is going to be this area here of $25 and just about 30 cents. This was established by our sell test in phase A, kind of the first stop of that selling pressure back in early December. Now, secondly, guys, we do have very good support over here. It really hasn't acted as resistance much, but since we are under this line, we are now considering this resistance. That would be at 26.84. Now, if we can break out of these two ranges, well, my next guess would be pushing to the upside here, right around that $30 mark. And specifically, there has been a lot of volatility in this lower trading region here, where you do have big dumps and big rips. So you can expect moving north of $22.50. It's going to be volatile. We are going to be bouncing around in between the support and resistance lines before moving up. It's not going to be a clean shot up to the moon, I promise you that, but it is going to be a lot of moving up, retesting, moving up, retesting. But really the first big thing, in my opinion, is breaking out of this downward trend, this bull flag that we have established, and then breaking back above that $25 support range or resistance range. Now, looking down at the technicals here on the 1 hour, good things is we do have the start of a MACD crossover. It literally just happened in just about the last hour of the trading day today. So that should potentially bring some day traders or swing traders and potentially just more volume to the stock moving into tomorrow. Additionally, looking down at the RSI on this 1 hour chart, we have been really just hovering in this oversold area for quite some time. Now, last time we were in this oversold area for, I guess you could say, this long of time would be just from the end of November all the way to December 3rd. And literally almost get like a mini inverse head and shoulders pattern on this RSI here. Get your shoulder, your head, your shoulder before moving up. And that did also have some type of, I guess you could say, spring action down before kind of launching up. That brought us from a low of $25.32 all the way to the upside of $33.93. So potentially speaking, yes, I do believe once we can break out of that bull flag here, RSI picks up, MACD crosses over, things are looking from a technical perspective very good for a move to the upside, which is why I'm really not considering this support over here at $17. I do not believe we are going to come. But of course, guys, like everything, nothing's perfect, and we really have to expect the unexpected. Now, moving over to the 1-day chart, of course, guys, we've gone over the macro picture of the accumulation schematic. And what you have here is you do have your lower trading range between $31.14 and $29 on the dot. Your upper trading range comes in right around $48 and $51. So really, phase D of this larger scale perspective here is really where I expect that volume to come in. Now, a few things to note. RSI right now is at 31.47, still just about at some low or the lowest levels that we've seen in quite some time. And as you can see here on 12/1, here on 12/14, and then again over here, as of today, we were literally touching and just floating right below that oversold territory. Now, last time we were in this territory was quite some time ago on 10/14. We were very, very oversold, right around the 19.53. And excuse me, guys. And 11/2, where we did kind of dip right into that oversold territory before starting our move up. And then again on 1/4, when we just touched this area before our massive January 27th run. Now, a few things too, guys. This quote-unquote death cross that everyone's talking about, which is the 50-day moving average and the 200-day moving average. It looks like we are going to have a crossover, which, of course, is not the greatest thing to see. Now, a lot of people are saying this right here could potentially bring us down to that $17 mark. But also, guys, if we do have that upside pressure, we could actually reverse this and start our move to the upside. I am personally not so concerned with this technical, I guess you could say, death cross, whatever you guys want to call it. I'm not concerned or fazed by this at all. I do not think it is going to bring us down to the $17 range. But of course, guys, we're going to wait and see how this plays out. Now, also, MACD having a crossover to the downside. However, look at this. Our buying pressure over here in this time frame of 12/20 to January 4th, not strong at all. So we are still under this neutral level. So I wouldn't be too concerned about that crossover right here. But nonetheless, guys, let's jump into some interesting articles that I want to discuss with you all. First of all, coming from Mr. CEO Adam Aron. What's going on here? Well, of course, guys, like we've been discussing per the Q3 earnings report, Adam Aron is releasing some cryptocurrencies to accept payments for tickets and all that good stuff. And what's going on right now? Just a quick update on how this is going. And good news, because we are still well on track for the promised Q1 implementation of cryptocurrencies. So this is some really great stuff, and just want to give you guys a quick update on this. Now, I do want to jump into the options flow right away because some interesting things going on. And yesterday, we did talk about a lot of those puts being sold. And today, specifically towards the end of the day today, we saw a lot more puts being sold, all around these 23 to even a high of $35 strikes, mostly for the 121.22, 114s, and even a few far out expirations too, like June 17th of 2022. But really what I'm looking at is those close dated expirations here. So seeing those being sold is extremely bullish. Also, you have to keep into consideration here the open interest for the January options, specifically the, hold on, let me check here. It was the 21st, was incredibly, incredibly bullish. The only thing that worries me about those calls and puts for those strikes of the 21st of January is the high implied volatility. Now, with this downside that we have seen, I would have liked to see that implied volatility cool off a little bit more. But the fact that we haven't gotten that cool off in the implied volatility isn't the worst, because all in all, AMC's implied volatility has been through the roof for the past year and a half now. So seeing at the level that it is, you really can't compare it to other tickers or what kind of the average implied volatility is across the board. So I would just keep that in mind if you are playing options, and specifically those more short-dated expirations for this January timeframe. But the large amount of open interest could cause some troubles for those hedge funds out there. So we'll definitely keep an eye on how this plays out. But nonetheless, seeing these amounts of puts being sold, specifically for these more short-dated expirations, shows to me that there is a turnaround in AMC coming. Now, let's just jump into this and go over today's input for this option data. And anyways, what are we seeing here? Still, we are seeing the calls outweigh the puts slightly. 54% on the call side, 46% on the put side. This is really not the greatest to see, but also to see the bullish activity outweigh the bearish activity on a day where we were negative slightly, but also continuing a negative downturn is actually pretty great. Now, a few things to keep in mind if we look at the expirations. We do see the 121.22 expiration. Wow, that's kind of funny to say. 121.22. Anyways, that is the one with a ridiculous amount of open interest. So seeing even more calls pile into this date right here is really great to see. You also have some activity very briefly around that 114.22 expiration that had a slight tick up from yesterday, and also that 218.22. This is more, I think, for people playing that 121.22 expiration, but just giving themselves a little bit more time. So if you are personally bullish on this 121.22 expiration, it's always good, guys, to buy yourself some time so you do not have that theta decay in the options flow, because you do not want to be risking it last minute and waiting for that bullish price up. Now, looking at the breakdown by strikes, we have some interesting things. Really, the two targets for today was that $24 and $25 area, where it's pretty much where we bounced, or at least we're targeting. So jumping back into the 5-minute chart here, but anyways, as you can see, when we did bounce out of this range and we did have that reaction to the upside, we did finish in the high $23 range. Specifically, it was at $23.77. So you could see that the bears, well, they were doing everything they could to keep us down in that range, below that $24 range. And the bears really controlled this, kept us under 24 for the majority of the day. But the bulls are still targeting $25, which does line up with our earlier discussion of the resistance line at $25. Crossing that would be absolutely huge. Sure. Will my conviction change? Absolutely freaking not. I'm here to the end. Whether this goes to $0 or 10,000, 20,000, whatever you want to call it dollars, I'm here for it all. It is what it is. I'm riding this thing out. And I know it is going to be freaking interesting. But guys, that's all I have for today's video. Be sure to smash that like button, subscribe for more content. Peace out, and tune in for the next one.